Yo, what's up, YouTube? I legitimately set my alarms to where I have the best time in the world to do just every little thing, and it has paid off because I have managed to set alarms for pre-market open as well as a bunch of other stuff, and I'm able to get on the ball when it's time for show to hit the road. Let's go ahead and move this here. Boom, move that there. Let's go ahead and mark a couple things. So last video, before I get crazy stupid far ahead, last video I said we would look for liquidity sweeps per what I have been learning from TJR trades. With that being said, that is exactly what we're going to do. We're going to learn how to identify as many liquidity sweeps as possible. Does that make sense? Makes sense to me. I said let's go ahead and get this show on the road. I'm actually waiting for my laptop to queue up so I can see that video. Let's go ahead and unplug you. Plug you into it. Right there. Boom. I had a very, very fun day yesterday. We actually managed to kill the tank. And for those of you who don't, I say the tank. Like, you know what I'm talking about. If you've watched any of the content on my Orbs Vault channel, you'll understand that we legit did a lot. Like, I completed a planet of missions, and there are a lot of missions on a single planet when it comes to the game I play on there. And then we killed a tank, and I actually managed, by some miracle, to get 3 level 1 enemies in a row, and these enemies that I go into detail about in that stream, in that video specifically, are like, you can't get them at level 1, and I got 3 level 1s 3 times in the span of a single day, which is unheard of even for me. Like, the first enemy of this kind that I had, I pushed all the way to a level 5. That's the highest level. Think tornadoes, right? The highest level you could think of. Hardest boss to kill. And in this game, I managed to get 3 level 1s. I pushed one of them to level 2, but that was like the fourth one. 3 level 1s in a row. Wild. Truly just, huh? Anyway, I'm going to digress now. I'm going to pull up Opera GX. Go to YouTube and look up the video. I am studying at the current. I am going to watch this like 5 times in a row. I am not even exaggerating when I say that, so I might actually just cut in editing exactly where I want to go with this, because why are you taking forever to... You should not be taking that long. So that's the thing. Boom. This is the thing. Boom. Let's go ahead and stop that right there. We ended that video where he was discussing equilibrium and essentially what it does. For reference sake, for content's sake, for understanding's sake, we're going to dive into 4 different confluence blocks, right, to further understand each one and to really dive into that like realm to identify it a lot, right? Liquidity sweeps can be seen on pretty much every single chart, doesn't matter what chart it is. Essentially, that's what we'll be doing today, is just identifying each and every single liquidity sweep we can find. I think I want to... Ooh, hello. That's a Stark sign up. Was my guess right last video? I don't know. I'm gonna be honest with you. I actually started feeling very, 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 very mentally just toast around that 2 hour mark, and I believe we recorded. So I was up for a while that night, and I think what I did was I got extremely tired, and I just couldn't absorb any more information. Like, I felt myself mentally just phasing out and going to sleep. So I had to call that video very, very early. We're going to save equilibrium for last so that way we know exactly where we are. We are 309.56 into this video. I'm going to rewind this video back to where he first starts talking about liquidity sweeps, how to spot them, and how to use them. That is my goal. That is what I'm after at the moment. So let's go ahead and rewind this where it says this, boom. Skipping around this video is just hysterical to me. It's very funny. I enjoy it. I didn't do that. I didn't break it. Promise. I'm using the arrow keys because. Hold up. Hold up. Hold up. Hold up. There we are. Okay. I distinctly remember before we left the video, I got a little bit of an inkling when it comes to identifying where liquidity is, what is liquidity specifically, and how market makers use it to manipulate the market in moving different directions. The way he expresses it here, the way I'm going to repeat it for my notes in this video as well. Just a side note, this video and the video from Monday are going to get edited down into smaller segments and then reposted. So if you manage to catch any of those videos and they're not the same as when you first saw them, chances are it's because I've taken them offline, shortened them by a lot, and then threw them back online. So it's a constant. You have beginning, middle, end on every single thing. So that being said, going back to what I was saying before, though, the liquidity essentially is just above every high and every low, right? When it's an uptrend, our liquidity is lying on high, and when we're on a move down, regardless of if it's a small candle, it'll be on the lows. So the lowest point within the most recent move. We'll have down, up. Here's our low between this candle here, right? Liquidity lies just below these lows. Liquidity lies just above these highs, or this high right here, right? Market makers use the liquidity up here to fuel the push down into the next move. And if in the event it does not clear the liquidity, it is not a valid liquidity sweep. Price would need to push past this, kind of like what it did here. Price moved down and it pushed past this candle here, and as a result, this would be considered our liquidity sweep. We can, as a sign, this is a sign of reversal, and as a result, we'd be looking at other confluences to further justify our means to enter in on a trade. There we go. We use confluences to justify where we should take a trade and why we should take a trade. Liquidity is resting orders above highs and below lows. Above highs, up, down, highest point, boom. Below lows, lowest point, boom. I think I got that covered. Liquidity is above and below highs and lows. It works. Before we get into any more, first off, this is where price is now. We are in pre-market. This is New York session open. We are in pre-market New York session at the moment. Price is currently moving down. We had this is on the hourly as well. We are currently in an uptrend, right? We just broke structure to the downside with this, actually, this candle right here. Actually, I'm sorry. Yeah, this candle. I'm going to say I'm wrong because we had to wait for a new low. Up until this candle right here, right? This would have been our lowest low, but that's not breaking of structure because why? It's a higher low. So we would have to come on down here. This is a higher low as well. Our break of structure is on this candle right here specifically because we tried to make a new high here, but it was lower, right? As you can see, that right there is much lower than this high made here. So we broke structure on this candle here. And we're essentially waiting on more confluences. Would that be considered an inverse for value gap right there? That is a huge fair value gap right there. Huge one. Do you see that, chat? Look at that. Wild inverse fair value gap. So price has got to come back down, clear this fair value gap, and then soar higher. We have a current. I'm going to go ahead and throw this onto the thing so that way we can see that good and clear. We have a fair value gap right here. 1, 2. And it's a bullish. Not bullish. What is it called? And it's like that. I'm thinking pretty color. I need to stop doing that. But we have a crazy fair value gap in here, and it is not being cleared yet. Like, I'm looking at this candle right here. These two candles don't matter when it comes to fair value gap. This one right here does. This one right here does. Price would need to come all the way back down into this right here, clear this fair value gap, making an inverse fair value gap, right? For us to understand that it is confirming the liquidity sweep that happened prior. I think our liquidity sweep would have been that's actually what we're getting into. Learning how to spot liquidity sweeps within the market and within current price action. So we're not having to double question ourselves this time. So this is where we're at. I have to wait. Hang on. So my understanding, and he's explained this very, 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 very well. Very, very well. However, for my slow brain, for my retardedness, my very, very inadequate sponge, right? He explains it like this. There are two ideas in the market, and I'm going to zoom out so that way it's nice and you can see stuff. Woo. So there are two ideas in the market. Either one, I think the price is going to continue higher in an uptrend, or B, I think price is going to continue down and it's always in the middle of a retrace. The same can be said for a downtrend. The idea is, hey, I think price is going to go up, or the idea is, hey, I think price is going to go down. That idea is turned into pending buy and sell orders. This is liquidity. Buy orders rest above highs and sell orders rest below lows. The idea is that on a down on this let's take this as a prime example, current price action, we can just use this. So people saw this leg up and saw on this leg down. Anyone who clocked in around this time probably had the idea, hey, we're about to be in a downtrend for whatever reason. It's their idea. They come up with their own ways, right? Their idea is it's a downtrend. So people are going to want to try and sell here. In order to sell something and make money off of it, someone would have to be willing to buy it from you. The same can be said for if you're buying something, someone would have to sell it to you, right? Um, so essentially, because of the ideas, the pending orders above highs and the pending orders below lows, right? We have an influx of people coming in and leaving the market. And per the fair value gap, this imbalance right here, again, this is just an example. There's a lack of orders being filled here. Specifically, if I had to guess, sell orders. Because we are currently in an uptrend. So buying, everyone's entering a long position using up this liquidity here, resting above it, right? They know price is going to move up. They think price is going to move up. They have their idea, and as a result, they're using, again, previous context to say, hey, price is definitely going up. Not everyone sees this as an uptrend, though. They see this leg down and say, ooh, this is a downtrend. We're about to move price down. And so what they'll do is they'll press sell in this, in a short position, and put their stop loss just above this, right? This is exactly how he's described it. I think, from my dumb brain, the easier explanation to this, and it might sound a bit confusing because it technically is, it's the same concept of not supply, yeah, actually supply and demand, but in the form of supply is one person and demand is another. And that's very confusing. Again, I'm gonna rewatch this 5 times until I get it right. I'm gonna have it so well thought out in my head, it's gonna be the first thing I think of when I see it. He says it's a massive amount of buy orders that lie above the previous high because people think, when people have the idea that we're going into a downtrend, they'll press sell here, right? And committing to buy their money back at a higher price. Whereas others who chose to run with the idea that price is definitely going to be moving higher because we're in an uptrend, they're also going to be pressing buy above here. So just above these highs are a large amount of buy orders. The same can be said for sell orders. In the event, let's say we are in a downtrend, just reverse it back down, right? There is a large amount of sell orders below the lows. And so that's essentially what people are going to be doing. They're pressing sell on the way down. And of course, those who are selling prematurely and their idea is wrong, they're putting their stop loss just above the most recent high. So, or did I say that right? I think it's below the most recent low because it's the sell order. It's supposed to be on the low side. You sell in a short position, you buy in a long position. Um, I said it backwards. That's why I'm confused. They're committing to buying back. That the person that had the idea that price is going to move up on a leg, move up off of a leg up in a downtrend, they're going to be pressing sell. I'm glad I'm doing this now. Let's rewind this. In a downtrend, the position gets pushed past when it gets pushed past in a downtrend. So let's just rewind this, go back here. A downtrend. Liquidity is resting below lows, previous lows, right? When the low is getting ready to get passed by this next candle, right? People are going to be pressing sell because they think price is going to continue moving down. They see this as a downtrend. Not everybody sees this as a downtrend. So what some people are going to do, they're going to press buy and put their stop loss just below this low. And as a result, it's the inflow, it's the trade between that and the people who had the right idea. Price was going to continue down. Those who press buy here are going to lose out and or get stopped out, and then those who uh, press sell here will have their money made. They can buy back lower and then have it sold up again higher. Exceptionally loud. It seems it is. That was excessively loud. It seems there is a what's it called? It is 8 o'clock, or it's about it is 8 a.m. my time. New York session still has not opened, so I think I set my alarm wrong. We still have. Does that say 9 hours and 15 minutes? I think that says 9 minutes before because it's delayed by 10 minutes. So 8 a.m. I'm looking at pre-market. I'm waiting for 10 minutes for market open to see what that's going to look like on New York. The New York session open. That's what we're waiting on. Let's go ahead and mark out this right quick because that actually threw me completely off. Four, eight. Good. Okay, we're still waiting on New York as well from NASDAQ. Okay. From here, we'll do this. said it in the previous video. I'm pretty sure I'm going to say it again. The almost exact same way he says it, because it makes the most sense when he says it the way he says it. In the market, whatever trend it is, there will always be your liquidity above highs and below lows. Market makers use the constant push past. So every time they oh my gosh, I sound like Joe Biden and I'm not a Democrat. It's a difficult concept to grasp, and my slow brain just isn't working right now. I'm not tired either. Like I'm fresh. I don't know why my brain's not computing this. I've heard it 100 times. So it's the loss of trades. I was right. I was right to say it the way I said it the first time, kinda, with the exception of the stuttering and the just right. So there are buy orders above, sell orders below, but that's just that's not even like all that matters. There's more to it, right? It's the trade-off between people who have an idea and are wrong, and the people who have an idea and are right. The people who think this is in an uptrend, right? They're going to be putting their stop loss just below the most recent lows. So essentially, they see price move up to here. They see price get moved past. They're going to press buy. And so that creates more pressure going up, liquidity going here. And on a leg down, some people are going to see this as, oh, we're about to move into a downtrend. And so they're going to press sell here and place their stop loss above the high, right? The trade-off is for the people who were wrong. They're committing to buying back at a higher price, right? And so they have to find a spot where they sold and to buy back to lose out their trade above this high specifically, right? And for those people who thought, yes, we are going to continue up into an uptrend, there is also a massive amount of buy orders up here, and as a result, price is going to move higher off of the massive amount of orders right here. Just like in a downtrend where there is a huge amount of sell orders right here, because one, the people who thought, hey, we're going to continue in a downtrend are going to be pressing sell again to get their price to keep moving down, right? They're going to have it go and go and go. And then for anyone who is thinking, oh, we're going up into an uptrend, this is off a retrace, right? So we're in a downtrend, and they're thinking, oh, this little leg up right here is going to be the break of structure that's going to keep going high. They have to sell their stock, their position, their shares to lose out on that trade entirely because their idea was wrong. They're not going higher. Instead, it's going lower. And so there is a massive amount of sell orders down low. Without a massive amount of buy orders or sell orders, market makers cannot manipulate the market into going into the direction they want it. They can't make that failed retrace, or what we, I believe, are trying to identify, liquidity sweeps, in order for market to show signs of reversal, making it impossible to read. because of this huge amount of liquidity above and below highs and lows in the market, market makers have that ability to manipulate said market through the amount of liquidity above highs and lows to push market ever so slightly in one direction and to watch it rebound as a result of the imbalance. Imbalance per the overbalance of liquidity, if that makes sense. Confusing. Stick with what I just said before that, not the imbalance crap. Stick to that. Literally as I said it. I said it a second time and I didn't even get to the part of the video. I said it the same way I did last time. Market makers use the liquidity above highs and below lows to fuel their ability to change the way market moves. So if they see a huge uptrend, but they want price to continue moving down, they have to take the liquidity from a lower low to push price higher to fill their buy orders. They take sell orders to fill buy orders. They take buy orders to fill sell orders. Just like that. They push price in a small direction to where it wants to go, and from that, we see large spikes up or continuations or reversals. That's how we build confluence. It's how we spot liquidity sweeps. They will have their way with price, and we can spot that within the market between on the data shown in past to predict the future. That's the gist of this. Keep doing that with the wrong keyboard. I did it last video. I'm doing it this video. I'm gonna break that structure. Yeah, I'm definitely breaking this structure. I'm break that habit real quick. Just doing this. So he said it the same way like he did last time because it's the same video we're watching. We're not watching something separate. We're not watching something new. We are watching the exact same video we did last time. So if you want to check out this video specifically, that link can be found in the description of this video, as well as a link to his channel specifically. Go check both out. This guy's cool. I'm still learning from him. Yeah. We're learning and taking notes at the same time. We're actively like going in learning this. So, he just got through explaining that what happens in a downtrend when, let's see if I can even draw. Can I draw? Maybe. I don't know. Let's see. This, not that. This, brush. In a downtrend, right? Sure, that works. He was saying that when this low specifically gets pushed past, right? Is it as simple as just pressing sell and knowing you're going to make money off of it? It's not simple. Why? Because if everyone was able to do so, that wouldn't be the case. I can't think of really realistically. The same can be said, I guess, for an uptrend. In an uptrend, the same can be said for the highs when they get pushed past, right? It's not as simple as pressing buy to go higher. If so, everyone would be rich. We're going to do this and continue pressing this to play. So in a downtrend, every time a low is pushed past, right? Every time it's pushed past lower, 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 the market has an opportunity. The market makers have the opportunity to fill their massive amount of buy orders because we haven't moved past any of these highs yet, right? In a downtrend, it has an opportunity to each time it moves past a low to fill a massive amount of buy orders that haven't been filled yet. And as a result, market makers can use that to their advantage and move price in a higher direction. Same thing in an uptrend. Let's go ahead and in an uptrend where we're moving higher high, higher low, higher low. Boom. Every time a high is pushed past, right? Market makers have the ability to change price in the direction of down from the buy orders, filling their sell orders the massive amount of get the words right. I'll push above highs. So every time it pushes past a high, the market has the opportunity to sweep the liquidity here to fill their massive amount of sell orders that are not being taken, right? And to push price down. There we go. I now have the words correct. Do I understand what this means? Yes, to an extent. My understanding is it's an imbalance because for every single new high, right? Let's go ahead and do this. For every single new high, right, there's a liquidity that's just above it, right? You have people trying to figure out resting orders, trying to figure out if price is going to go higher or lower. The imbalance in this specifically is with the lows because there are people down here who are thinking price is going to continue moving down, or they don't see that we're in an uptrend and they choose to press sell to take that short position. And as a result of getting stopped out, putting their stop loss above the high and allowing it to go higher, right? The there is a lack of sell orders being filled. And as a result of the lack of sell orders being filled, market makers have the ability to use the buy orders to sweep them, right? To fill the sell orders and to move price further down. If you're watching this video and have experience with that kind of concept and know what I'm talking about, comment down below. I am open to constructive criticism. I am learning. Tell me, was what I just said as accurate and as plainly stated as could be? Was it accurate enough for me to say liquidity? Like, I know what I'm talking about when I hear the word liquidity and what market makers want to do with that liquidity. Is that I can't predict what the market makers want to do. That's the whole point of day trading. I'm asking if that concept was explained to a standard that is acceptable to a day trader who has been at it for a while, who has the experience to say, yes, it has significant meaning for you to know this. If I'm right, comment. If I'm wrong, comment. I'm open to all the knowledge I can get. I'm learning from this guy specifically. I'm not going to move away from this guy until I've mastered every concept in this video because I want to get good at day trading, and so I will. I know we haven't gotten to the liquidity sweep part of this video yet. It's the general understanding of what liquidity is, how it can be used in the market, and again, how to indicate where liquidity is on top of what is a valid sign that there has been a liquidity sweep. To understand a liquidity sweep is to understand what is being swept, why it's being swept, and where exactly it has the potential to reverse as a result of that liquidity sweep. What am I to see from this? I think, realistically speaking, after all of what I just said and after what I'm looking at, I think I am okay with saying that this right here can be considered a liquidity sweep because we had a huge upshoot of price, right? Price moved, it just kept going higher and higher and higher. It had no opportunity to sweep any of these lows up until right here, right? We had an imbalance of a fair value gap. Price had to come down to fill some of that fair value gap, but it didn't fill it quite enough. There's still an imbalance down here. And so as a result, we're looking at market makers manipulating price right now. They're trying to fill this imbalance, the lack of sell orders from that caused this imbalance. And as a result, we now have a liquidity sweep here, right? There are specific building blocks within this, such as breaker blocks, order blocks, the like, that we will get into later on in this same video if we have time for it. I want to delve in and actually confirm what this is before I say, yes, this is without a liquidity sweep, because right now I'm going off of the fact that a liquidity sweep, per the definition, looks like price is getting moved past here after a trend identified. We were in an uptrend. We technically still are in an uptrend. We broke structure on this here specifically, and from the market makers' lack of sell orders, they're using the buy orders to fill the sell orders, pushing price down. And as a result, we now have our liquidity sweep from here. This I think would be considered a liquidity sweep. We did get a break of structure beforehand, and we're getting signs that price is trying to rebalance itself back out. Let's continue with liquidity sweeps just to stay on liquidity sweeps. Most important confluence. Most important confluence is what he's saying. So let's go ahead and rewind this. So am I right and wrong in am I right in saying that I'm actually looking at two liquidity sweeps here? Two variety of liquidity sweeps, and then I'm gonna break this down where it's good and simple, right? So going back to what he was saying, that market had the opportunity to use the liquidity above a high to push price low, right? They fill their sell orders from their buy orders, and as a result of them doing that, it pushes price higher, right? As a result of them pushing price higher, this candle right here would have technically been the liquidity sweep because they chose to manipulate this price to try and push it down, but it didn't quite make it. Liquidity made it past this high, this low, or you get my point. That you get my point. Market makers manipulated this, push price lower, and it chose to rip even higher. creating an imbalance. And so now market makers are trying to, you guessed it, reverse price. They're trying to get price to move back down. That's the idea I have at the moment. As a result, we're watching a literal liquidity sweep unfold. We had price push all the way back down into this right here after we had a confirmed break of structure. Yeah, I think we literally, like, per this right here towards the end of New York or Sydney session, Australian session, you get the point, right? They had a huge surge, and that would have been the liquidity sweep off this high, and then from there we had a bonus liquidity sweep off this break of structure right here. But the first liquidity sweep caused such an imbalance that we got a secondary one, I think. Am I right in saying that could be a thing? Like, it makes sense to me, kinda. It makes sense to me. It's like the tank fight. If you've seen the stream, you know what I'm talking about. Every single time, it never ends. It never ceases to stop with me. When my friend joins the party and we talk about that tank, my blood boils and I feel it. My body becomes jittery. You ever have that feeling that you're freezing, but your limbs are completely fine? Like, you can feel your fingers and your toes, but everything about you is saying, I am cold, and so shiver, right? That is the way I feel when I'm talking about that tank. And now learning this, because it is the skill of just point A, point B, point C, and getting through it. I feel the same way now as I do from when I'm just talking about fighting the tank. Fighting the tank, I am a nervous wreck. The psychology is gone with me. I am hard locked on defeating that tank, but man, am I freaking out the entire way. That is just a me thing, and I know it's something I'm gonna have to fix. I'm gonna need to fix that later on. And I think the best way to fix it is essentially what I'm doing now, just recording it and getting it out of my system before I really put money down and actually start making a profit off of this, or losing all of what I've got left on just this. Um Honestly, I think this is the best method of getting confident with it. I can feel myself learning. So that makes sense. It does make sense. Liquidity sweep is when market makers manipulate the high. So we move from one high to another, right? People press buy here thinking it's an uptrend. People press sell here thinking it's in a downtrend. What happens to people who press sell here and get stopped out? They get stopped out. As a result, they are forced to buy back at a higher price. When they buy back, market manipulators legitimately manipulated this high, and as a result, had the ability to fill their sell orders, pushing price down. It is the leg up that is the liquidity sweep in an uptrend. when we push past a higher high, it is the liquidity sweep, and then the move down afterwards is the result of said liquidity sweep. Um, Same thing in a downtrend. I'll draw it out. Boom. In a downtrend, when a low is pushed past, market makers are actually taking advantage of the people who put sell orders down low to fill their over amount of buy orders to push price higher. And this leg down right here would technically be like one really, really big candle. Like I say really big candle. In using this example right here, just flipping the chart entirely, right? We would see large amounts of candles, like large candles moving down past the most recent low, right? And that's market makers essentially sweeping this liquidity and pushing price higher, filling their buy orders with the sell orders that got stopped out from this right here. Yeah, I'm getting there. I'm getting there. Comment section. I'm pretty sure I didn't mean to do that. I'm drawing what I'm trying to do this right here. Let's watch this. Getting there. If you enjoy this kind of content, give it a like, subscribe. You get a video every day on this channel. mark out liquidity sweeps. I'm pretty sure he says 10. I think I am confident in doing this. Let's go here. Let's stop right here, and I wonder if I can do this. Actually, let's do this right here. Boom. It won't let me rewind it. Will it not? Will it not let me rewind it at all? That sucks. I wanted to rewind it. I wanted it to be like a cool kid. I wanted to do it, but no, I wasn't allowed to. That's okay. We can still work off of it. Um. So liquidity sweep. Let's identify a few liquidity sweeps, shall we? Let's start with this like movement right here. We have boom. Let's go ahead. We had low here. Boom. We had low here. Boom. Our liquidity sweep is this right here on this wick. We cleared both of these lows and it gave price the momentum to move higher. We cleared this low. So there was a liquidity sweep here. Price moved a little bit, but it wanted to come back down. That's market manipulation, sign of reversal. We have another large liquidity sweep. We swept both these lows. Boom. Let's go ahead and delete the two of those and screw it off of this right here. Let's have some fun. So we had a high here, 1, 2, boom. We had another high right here, 1, 2, boom. Although it wasn't as high, so meh. We swept liquidity right there. I mean, I don't even need this line. I marked it earlier. That was like the most recent one. But yeah, that's boom. We swept that. Price moved lower. I say let's have more fun. Let's go over here. Let's actually go to a different time frame completely. Let's go to the 10-minute time frame, just cause. There we are. There we go. So on the 10-minute, let's go ahead and just do this right quick. Yeet, boom, good. I think I was right when I said it the first time. I think I was. I don't know. Let's see. So we had low here, 1, 2, low, low, boom. There's my low, low. Yay, yay, yay. So we had another low here, 1, 2, boom. We swept this, and so what we're waiting on is price to go higher. Liquidity sweeps are signs of reversal. Does that make sense? So we're looking for the move that caused the break of structure. That would have been this candle right here, I think. Let's digress. That makes sense, chat? Let's completely digress for a second. I'm jumping ahead of myself. That is not fair to me. That is not fair to you. Let's actually look at this. Liquidity sweeps right here. Let's just look at this specifically, right? What do I see? I see a high right there. Up, down, high. Highest point between the two, boom. What else do I see? I see that high going way past right here. Except it doesn't just stop right here. It stops right... That's very hard to see. Is that a red candle? What is that? Grab this, go over here. Those are green candles. The highest point it got to was right here. No particular reason, just looking at an up down right here and seeing that this candle wick is shorter than this one. This is the highest point it got to. liquidity sweeps are the push pasts of previous highs. Market manipulators taking this, all the buy orders up high, right? And using to fill their massive sell orders, pushing price lower. Market makers did this move, this large candlestick down, right? We had an imbalance. Where's this? We had an imbalance right here off of this. Boom, right? We had a minor liquidity sweep, or no liquidity sweep. We had a minor fair value gap, right? And as a result, it transformed into what? I'm trying to show because I want to be a cool kid. Anyway, this. We had a minor fair value gap right here, an imbalance, and as a result of price moving past, essentially market makers manipulating the buy orders up here to push price down, fill their sell orders, right? And it failing to do so, creating this imbalance. We had price move back up, creating an inverse fair value gap, which is a sign of confirmation that price is going to continue moving in an up direction. We had liquidity sweep as well because we pushed past this most recent high, and from that we had a break of structure afterwards, which is our sign of continuation. Actually, the break of structure off of this right here is a sign that price is going to continue moving up. I want to see what caused this move up within this right here. I want to see the liquidity sweep happen right in this. So what I'm going to do is this right here. I'm actually going to zoom way in for this. Boom. I think that right there. Yeah, that encompasses what I think might be the liquidity sweep. So what do I see? I see a low here. Up, down. Boom. I see a low here. Down, up, lowest point. Boom. We pushed past this low right here with this. This would have been our liquidity sweep, if I'm not mistaken. We actually, if we want to get real technical, we pushed past two lows. We had a low here, price pushed past it. This would have been our liquidity sweep, and as a result, we had reversal. Price shot higher. And in this, we can see it right here too. Let's go ahead and boom. Let's go ahead within this, see why price went higher here. I think I'm getting good at identifying liquidity sweeps. I'm going to do 5 more. I'm going to go to different, like 2 more time frames. We'll find a couple more. Get good at finding these because I want to find all of what I can. So we have, this is where things get a little confusing, is this right here, right? This right here is the most confusing bit. I think I can't count these. Why? Because we didn't really move past any lows here. It's the liquidity sweep right here that pushed price higher. We know this, right? And we didn't get any low, like any push past lows from this. We just know that that was the liquidity sweep, like this right here was, and price took a hike up. If we want to get real technical, I think this is even more correct. I think we had a high here, right? I think our liquidity sweep was actually this high right here. Price pushed on this candle right here specifically past this high, and as a result, that would have been a liquidity sweep. And because of that, it moved down. Just a little bit though, not much, right? I think our next bet is to do this right here, right? Within this little movement, because we had price push higher right here, but we would not have seen this. I really wish I'm able to like do this right here. If I could just cut this off, I know the notepad's in the way. Let me minimize that so you can see a little better. I want to do this right here, right? This liquidity sweep without seeing anything past it. So let's go ahead and mark that out. So we think price is going to move higher. So we're looking for lows to get pushed past. We're looking for low liquidity sweep. So we're looking for this right here. Down, up, lowest point actually would have been right here. Boom. We had a low here. Down, up, lowest point right there. We had most recently, because this would have been the most recent low, this would have been the candle to push past both of them and create the lowest low here. This candle would have represented our liquidity sweep, pushing price higher. And just to reconfirm that off of this candle here, I believe this would have been what we're going to call later an order block. This order block is the sign of continuation that, yes, price is going to continue moving higher from this liquidity sweep right here specifically. And again, this is all understanding that market makers are manipulating the highs and lows to force price in a direction that it doesn't want to go in. And as a result of failing to move price in one direction, as you can see, it did not, this price right here did not clear this low. And so this right here would not have been a valid liquidity sweep off of this right here. Instead, price moved higher. And sure enough, we see price skyrocket immediately after that liquidity sweep there. Let's go ahead and head to a different time frame. Let's go to 10 seconds. I can't view 10 seconds because whatever that means. Because I'm poor. That's what it means, Chad. It's because I'm poor. All right. Boom. Let's identify liquidity sweep and this. This is very recent price action. I already know. I'm getting there. I'm doing this. I think our liquidity sweep would have been, let's identify the low. Down, up, lowest point between the two. Boom. Our liquidity sweep would have happened right here. Low got pushed past by a little. Doesn't matter how little it is. It got pushed past. As a result, price moved higher. We're forming a new low here in a second. Technically, per the 10-minute time frame, or 1 minute time frame, we are in a downtrend. Each one of these candles represents a single minute. Interesting gist here. Let's go ahead and do this. Boom, boom. Yay. From here, let's see what we see. Let's actually see why price is moving down at the moment. Because that would have involved a liquidity sweep for price to move down like that. So let's identify that. We had a high here, boom, and it was pushed past. Liquidity sweep, boom. We actually up, down, highest point between the two, boom. We pushed past price on this candle and continued to move higher. This was our liquidity sweep, and as a result of pushing higher, our movement went much further down. Technically, if we want to get real in depth, I think this is an accurate representation. We have another liquidity sweep forming now from this candle right here. We have a down up in an uptrend, right? Boom. We just pushed past. We're pushing past this candle right now. If this candle closes below this, we have 58 seconds to find out if this is going to be a liquidity sweep. If it is, that means this next candle right here is going to be a large candle going up. We're going to have another large candle just push past all of this, I think. Let's see. We got 43 seconds, chat. And I could be wrong. I think that's what the primary gist when it comes to day trade. This is like identifying with one context, one confluence as to what price could do. This is how inaccurate you can be when guessing. I thought price was going to go higher. Looks like it's going to go lower. How low is it going to go? How low is it going to go? We have a low here. Let's go ahead and actually mark these out so that way we're gold. We have a low here, down, up, lowest point right there. Boom. We have another low here, down, up, boom. Yeet. This right here actually would have been liquidity sweep on the low side because we cleared this low here, right? Not this one, but this one right here. We cleared that low, right? And as a result, price moved higher. So we're looking for now a reversal to the upside. That reversal would be this low right here getting cleared by this low here. Let's go ahead and clear this here and this here. Boom. Actually, it'd make more sense if price reversed without touching this, because we have one, two, well, actually, we had a fair value gap, a small imbalance right there, chat. Very small imbalance. So price is recovering from that, but as it's recovering, it's also leaving imbalances of its own. Looking back, let's actually go up to the 5 minute right quick. That's the 3 minute, not the 5 minute. We're going to do this. We're going to shrink that back down. Boom. Let's see what price did, actually. Is that a fair value gap in that right there? Boom. Yeah, it is. That's a very small fair value gap. There was a minor imbalance on the higher time frame. There was a saying he used to say in his videos back when he was like brand new, starting at like 3 years ago, starting YouTube, right? He would say higher time frames hold higher confluence. What does that mean? It means to look at higher time frames for, guess what? A more accurate representation on what you're getting yourself into. Don't always go off the smaller time frames, because guess what? They can be misleading. Because guess what? We are right now in a downtrend. I can see that technically. Yeah, we are currently in a really, really big downtrend. We're entering a sort of consolidation period from what I can see right here. We have legit movement just. So yeah. So we cleared this right here, but we did not clear the lows. We didn't clear the highs either. So this is where things get a little interesting, in my opinion, because we don't have lows that are clearing lows, right? Unless we want to get like, I don't think we can do that. I don't think we can. Would that be a liquidity sweep right there? This one right here, we got a low here. I'm going to delete this line because I'm tired of seeing it. Goodbye. This line right here, right? We pushed past this. So what I think is going to happen because of this liquidity sweep, and this is on the 5 minute time frame, mind you, because we pushed past this low, this is liquidity sweep, I think price is going to continue moving higher. This right here is just one really big retrace filling in this really, really, really large fair value gap that I've marked out here. I understand why that entire box is the way it is. It's filling the fair value gap. Major imbalance there. So what we're looking for, I think, at this point in time, if price wants to continue moving down, which it more than likely will, it should clear this low and it should push down towards this to clear this fair value gap, making it an inverse fair value gap, which would ultimately give us a definite sign of continuation. Prices will bounce from this way higher, creating a new high. Just a thought. We want to make sure price is at a discount though, so we're getting the best of our ability. And I think that's honestly where we can actually apply the GAN box that he was referencing, or like in the other videos. So we go to the highest high, most recent highest high, most recent low, boom. And price has crossed that 50% threshold already. So I think that is the sign of continue. Like, that is the, without doubt, if you're not seeing an order block or a breaker block, which I am more than definite there is an order block here and as a breaker block as well. I think I am accurate in saying, per the confluences and per the uses of these tools, that price is going to move higher, not lower, right? That's what I think is going to happen. And I could very well be wrong. We're going to keep this one here because we want to see if price is going to continue moving past this. If it does, it'll move lower into that 50% mark, and we'll be looking towards another liquidity sweep to the upside past this high and past this high here. Because right now there is a lack of buy orders. We are in a downtrend. We're waiting for market manipulators to manipulate the lows to fill their buy orders to send it higher. Let's go ahead and continue watching. Identify a time where the market has moved underneath the low and changed direction. Well, we moved below a low. I don't know if it changed direction though. Technically, it's still going down. Let's do this one. Actually, we've been on the 5-minute for a minute. Let's go. I can do 30 seconds? No, I can't. I can't go in the seconds. Sad. I'm out of seconds. Screw it. Let's do minutes. Just cuz. Yeet. This is the thing. Yeet. So I think actually this works in our favor. Back to back. Like candle, like down, up, lowest point, boom. Down, up, right here. Down, up, and the lowest point is way down there. This right here swept past this really quickly and changed direction immediately afterwards. But I don't think I can count that. I don't think that's valid enough to be an accurate representation. I don't think it is. So, trying to find a good one. I think it's gonna look ridiculous. I know. That's hard to see. Nope. 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 This is what makes things a little bit more difficult too, because you have candlesticks like this moving up, 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 right? And there's not much moving down. So because we're at the top, I think this is where we're making a mistake here. I'm looking for the reversal down low to move higher, when in actuality, because we're in an uptrend right here, I think we're looking for that change up high to move lower. And I think I literally just found it at the peak of it all. We had two highs right here. Boom. They both got swept by this candle right here, and as a result, price moved lower. That is like prime time example liquidity sweep. Up, down, high. This right here, technically, this what I counted as the second one doesn't really matter because it got pushed past anyway, and it just plummeted. Yeah. Let's go ahead and remove that. This right here might be one, actually. Boom. We had market move down, up, lowest point right there. Boom. Price pushed past it and kept pushing past it. We actually swept liquidity with this on 2 candles, 1, 2. As a result, price skyrocketed from that. Let me know if this is accurate enough. If I'm wrong in any of these examples, in any of this, let me know. You can timestamp it. I don't care. Honestly, let me know because I want to get good at this. Down, up. We had a low here. Boom. And I may have actually done this already. I could be wrong. We swept that with this. Down, up. Lowest point right there. As a result, price shot way higher. It's the first example like that I've found. This right here. This right here is going to be a difficult one for me even. So let's go ahead and just zoom into this. Boom. We had a bunch of stuff happen right here. This is like crap to look at, I think, because price isn't moving much at all right here. It's just up, down, up, down, up, down, down, blah, 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 right? And this is on the minute, so each one of these is like lightning fast, just forming. I think down, up, this right here, boom. Our liquidity sweep would have been this right here. Down, up, lowest point, boom. It failed. We had a little bit more of consolidation, and price took a rip. Boom. Yay. Do I think I am confident in identifying liquidity sweeps? I'm going to say I'm 50-50 on it. Still. I'm going to say I know more now about liquidity than I have in the past. And that now that I know where to find liquidity and how market makers use said resting orders above highs and below lows to manipulate the market, I can identify liquidity fairly okay. I'm not going to say I'm the best. I'm not going to say I'm the worst. I'm going to say I'm learning and am okay at the moment finding liquidity. Let's go to current price action, shall we? Let's go ahead and like reset chart. Boom. Let's get to current price action here. Let's see what is going on. Let's see if I can see a liquidity sweep. I want to say I do. I do see one form of that, and it actually happens to be relatively recent. Boom, right there. Down, up, low. We just swept this. I think price is going to go higher. Per this imbalance right here being completely filled. Remember when we came over here last time, right? We had an imbalance. Price saw another imbalance in this and chose to close that imbalance by moving up past this. However, it still left us with an imbalance up high. Though price can move this way, it's not going to, because this right here is our inverse fair value gap. It was closed below, so this fair value gap does not matter, nor does this right here, inverse fair value gap. So confirmation that price is going to continue in the same direction it's going in, right? We had liquidity sweep off of that right there. I don't know if you're able to see that. We had an up, down, right? I'm wrong. That's not liquidity sweep. It's just an inverse fair value gap. And as such, this right here is completely unimportant to us. We can like blur this completely out. We're on to all of this right here specifically, right? Let's go ahead and just leave it right there. Boom. What we're waiting on to see is that liquidity sweep there, and we're waiting for a fair value gap to form, or we're waiting for a break of structure. We're waiting on something that is going to tell us where direction is going to go. We have our liquidity sweep. Our break of structure, we are currently in a downtrend. We have not broke structure yet. So for continuation, we're looking for fair value gaps. We're looking for order blocks, break blocks, equilibrium for price to continue moving down. Our time frame holds higher confluence. Go to the 5-minute. Yeet. Boom. We have not swept liquidity on the 5-minute. So I don't think we're in reversal per the 5-minute. The 5-minute says it's going to go higher. Let's see what the 30-minute says. Boop. Boop. Good. Yeet. Yeet. Skeet, skeet, skeet. Anyway, I'm messing around. We had a sweep here. This low swept this liquidity here. And as a result, price should be moving higher. It looks like we actually had another sweep there, right? Price moved higher than this high, pushing price lower. And we still have our imbalance here that has not been completely filled. Actually, I think it has. It has been completely filled per this candle right here. So the imbalance is done. This is now, I think, an inverse fair value gap. I'm wrong, because inverse fair value gaps are fair value gaps that have been closed below. It can be closed into, the wick can be into it. So long as it remains in this box, it is fine. But once a fair value gap has been closed below, it has been disrespected. And as a result, is no longer valid. The fair value gap is no longer valid. It is a sign of continuation that price is going to move higher. So, two things I think I'm looking for. Two of them. I'm looking for price to close way below this. It'll drop like a rock below this green box, right? And it'll close below it. When it closes below it and disrespects this fair value gap, that's our inverse fair value gap, and as a result, price is going to move much higher. That's what I think is going to happen. We have a liquidity sweep to the downside. That is the sign of reversal from this uptrend. So price is going to continue moving down. We're looking for a liquidity sweep back to the upside for confirmation on this inverse fair value gap. From that, we can see this low right here, down, up, boom. This low would have to get swept in order for that sign of reversal that we're looking for to be valid. And from that, price will move higher. Hi, I'm recording a video. What's up? What's up?
I was gonna say there's something up with the internet.
Something up with the internet? Oh no. Pardon that brief interruption. Where do I think I am with identifying liquidity sweeps? I think I'm okay. I think I know how to identify a liquidity sweep now. Just to keep it simple. I know why they occur. I know why they occur. I know what liquidity is and where it lies. Now, let's move on. What's break of structure? Let's go ahead and identify that right quick. Break of structure in an uptrend is when we have a lower high. So we make a new high, make a new low. An uptrend moves in a higher high and a higher low. Our break of structure is when we have a lower high. And now we are in a downtrend, lower low, right? This candle broke structure. Makes sense. Why does it occur? Break of structures, we'll get to that in a second. Inverse fair value gaps, what are those? Or let's start with fair value gaps, keep it simple. A fair value gap is 3 candles, 1, 2, 3, with first candle wick being so low, last candle wick being so high. It creates a gap, a kind of gap that removes, that is essentially an imbalance. It's got to be rebalanced. What is an inverse fair value gap? Inverse fair value gap is any any fair value gap that has a candle closure below it in an uptrend or a candle closure above it in a downtrend. Make sense? From that point on, let's go to SMT divergence. SMT divergence is when these two charts right here do not line up. We are currently looking at two different time zones. This 30-minute, boom, time frame, not time zone, boom. We have this chart here. We have this chart here. These two will look either the exact same, really close to the exact same, or they will look very, very different. Yeah. Looking for differences actually right now, just so we're on the same page. I'm not seeing any differences at the moment. Price is pretty much matching blow for blow here. Both are in line. We could take trades off of either, to be completely honest. So let's go ahead and head to order block, breaker block. Those two we are learning. This is the next part of the video, chat. Buckle up, get ready to go, because we are now on the road. He's talking about fair value gaps now. Imbalanced price action, needing to get balance back out. The order. The order per the strategy he's handing us in this video specifically goes from reversal. We go from liquidity sweep to either break a block or not break a block. Oh my gosh, I messed it up. And it's literally 2 words in. Oh my gosh, comment section. Roast me, please. Dagum. We go from reversal sign, right? Liquidity sweeps. We go from reversals to confirmation confluence, break of structure. I said that right that time. Or inverse fair value gap or S&T divergence. From there, we move down to continuation confluence. That price is going to continue in the same direction, either through a fair value gap or an order block or a breaker block or equilibrium if we can't find, guess what, any of the other 3 continuation confluences. And then from there to execution. We find our price at discount or premium if we're in a downtrend. And from there, we either short it in a downtrend or long it in an uptrend. Buy in an uptrend, sell in a downtrend. Yay? Yay. From here, let's learn order block. I believe that's what he covers first. Talking about inverse for value gaps now. Inverse fair value gap is a fair value gap that gets disrespected within current trend that shows a change of trend. Confirmation confluence. It confirms the change of trend. by disrespecting a fair value gap. A disrespected fair value gap is the confirmation that trend is going to continue moving in the direction of the inverse fair value gap, which in this case would be down if it closed below it. Order blocks are solely the leg up or down prior to the liquidity sweep, per the definition. I'm going to try and identify a couple of them. Okay? Okay. Let's start with the 1, shall we? This right here is our liquidity sweep, according to me. Why? Because we had a high here that was legitimately done like, right? We would have spotted this from the leg down. This right here would have been our order block, right? It can be any number of consecutive candles so long as they are the same color. Red, red, red. Ooh, look at that. Leg down and liquidity sweep. Order block. That's 1. Let's change up time frame. Let's go to the 2-minute time frame just cuz. Can't go to the 2-minute, but we can go to 3-minute. That works too. Let's take this. Let's go all the way down here. Scroll way the flip in. Order block. Well, first we gotta find where we think liquidity is, where the sweep is going to be. We have to sweep some stuff. Here is a liquidity sweep. Boom. Leg down. Boom. Where's our order block? The leg up. This whole thing from here to here is our order block. Remember, it's leg up in an uptrend prior to the liquidity sweep down. Boom. Make sense? About right here. What about right here? Anyway, I think the best bet is to do this because this is where I begin to struggle, chat. This is where I begin to struggle because we can see price is being price at the moment. Boom. We have a high here, low here. Highest point, boom. Our liquidity was swept, chat, right here. Where was our order block? How? Right before the liquidity sweep, this candle wick down. Like down right before liquidity sweep. That's what this was right here. Let's go ahead and exit this. Boom. Let's go ahead and actually, I think this is actually a prime example of it. We have boom, a low here, down, up, lowest point between the two, boom. We have a order block and a liquidity sweep right next to each other. This right here swept past the low, and it was the leg up into the order block that caused. Actually, this may have been the breaker block because we swept past this low here. We had a down up low sweep, which means it would have been, yeah, this would have still been the order block because this swept liquidity, pushing price higher. Our order block is a leg up into the liquidity sweep, pushing price higher in a downtrend for this right here. In an uptrend, we're looking for highs to get swept. So, boom, we're looking for high to get swept. Where's our order block in this? On a higher time frame, because we would have been able to see it. Boom, much easily, something like that, right? Something like that. This right here. Our order block would have been this candle right here. I'm wrong. It would have been these 5 candles right here, actually, because we swept liquidity on this candle wick right here up. Down, up, lowest point, boom, up, down, high, boom. Yeah, we swept liquidity on that. And as a result, we got our order block being 5 candles long. Let's identify another order block. I think I'm getting good at this. If I'm wrong, I mean, you guys have the comment section. You can comment anything you want in there, as long as it's not something defamatory, doxing. You get the point. As long as it's within YouTube's rules, and we're being nice to each other. Because why be rude to each other when we're trying to learn something? You know. I'm gonna be rude to myself because I'm straight up a retard learning this for the first time, and I should have had this learned a long time ago. Honestly, it to me, like, putting words to chart to learn something, that part's easy. Putting words to chart and literally risking psychological fortitude is needed, because that is a risk. One way or another, that is a risk. That will always be a risk. Made a low here. Got swept. Where was our order block? Boom. Like up into liquidity sweep order block. Does that make sense? Does it make sense? I think it makes sense. And I'm sure he's going to go over examples of this in his video. I just want to get as many of these down so I'm not... This is perfect right here, actually. Boom. So we're waiting for highs to get swept. I believe this right here. Boom. We got swept here. Where's our order block? These 2 candles. Down, up, lowest point. Boom. Down, up, lowest point. Sweep of liquidity there. Price moved higher. Where's our order block? Leg down. These 2 candles right here. Good. What's an order block again, just so we're on the same page? Chat, what's an order block? An order block is a sign of continuation that price is going to move in the same direction it's been moving for a minute. If we see an order block, it's going to continue moving. How do I identify an order block before the liquidity sweep? Through another confluence we'll get to in a second. I believe it's called a breaker block, if I'm not mistaken. And again, that is the risk, is identifying when a liquidity sweep is going to happen. And potentially getting it wrong. might I add. Perfect. Let's do this. Boom. We had up, down, highest point. Boom. Sweep. Where's our order block? This candle all the way up to this candle here. Let's move to a different time frame. I think it's getting a little. So were we just on the 30 minutes? I don't know. Let's go to the hour. Boom. Perfect. Yeet. Boom. This. Say up, down, high. Boom. Liquidity sweep. Push down. Where was our order block? Technically, if I'm not mistaken, it was this red candle right here. That one. We actually had two sweeps. We actually pushed this above this high, and then this pushed even higher above that high. So we had technically two order blocks, if I'm not mistaken. We had this one right here and this one right there. And I think I'm wrong in saying that. Why do I think I'm wrong in saying that? Because we're looking at essentially over a large span of time, one spot of liquidity versus another. And it's correct to say that. This right here is also one. Boom. We had right here, down, up, lowest point. Boom. We had another low point here. Down, up, liquidity sweep. Where was our order block at in this? I think this is where our S&T divergence would actually come in handy here, because I'm pretty sure this is somewhere that doesn't make sense, because there is no order block in that, though we did get a sweep. We could have done that, though, because we were at this point in an uptrend, right? So we would have looked for that liquidity sweep here, sign of reversal, price drops, right? We're looking for a sign reversal back to the upside, and sure enough, we get it through, you guessed it, a liquidity sweep, I think, right here, right? This high right here was swept out by this right here. As a result, that was the sign of reversal. Price pushed up. Our order block would have been these three candles on the way down to force this to move back up. Am I doing good? I think I'm doing good. We'll know eventually. Time tells all. Down, up, low, boom. Technical sweep there. Price moved higher. Order block, leg up, right here, these two. Went up, pushed down, swept, pushed higher. I think we're good with order blocks. I think we've discovered, I think we've learned what order blocks are. We're going to go reset chart view. Boom. We're going to do this. We're going to do this. We're going to do that. We're going to zoom way the flip in. Boom. This. 1 minute. See, much further in there. Yeet. Seems in the time I have spent away, price has proceeded to move even further. We did sweep liquidity right there, right? However, we also, as a result of sweeping, we came back up and in to fill these fair value gaps, creating an inverse fair value gap, right? Which is this sign. An inverse fair value gap is confirmation in the reversal, which means price is going to continue moving down as a result. This right here just got swept, right? Per this, price moved below it. right here, we're looking for a liquidity sweep back to the upside, but per that reversal is going to continue moving down. So there's, I think, no reason to do it, except now we're looking for right there. If we want a reversal back to the upside, we'll be looking for a liquidity sweep off of this low specifically. We had a low here, down, up. That right there is our most recent low. We'd be looking for that reversal to the upside, right? If we wanted price to move up. We know price is going to continue moving down per this inverse for value gap right here that was formed. Yeah. For the next 30 minutes. Fair value gap was filled. This is now an inverse for value gap. I think we're good. I think we're good, chat. I want to continue. You said find 5 examples. I think I just went through about 10. So, a valid order block. Now, I'm going to show this here right now, actually. So that way we're pretty much golden. So, first off, we need to identify a liquidity sweep. Or what we think is going to be a liquidity sweep. And I think we have found one right here. Boom. Down, up, lowest point, boom. So, the order block is the leg up into the move back down per this, right? This right here is our order block. This one, small candle. I think. Does that make sense? I think it makes sense. I don't know. Downtrends are a little bit more complicated because you have to think in reverse. It's the leg up that causes the liquidity sweep back down, right? Nope. Would that be it? Would this be a disrespected order block? So if order block is a range, if the order block is a range, right? What we're looking for specifically is for price not to have a wick go above the order block, right? That is a valid order block. If price, for whatever reason, has a wick that goes way above said order block, it is no longer valid. It has been disrespected, and as a result, what was a continuation has now become a break of structure back to the upside. If that makes sense. And break of structures are confirmation that price is going to continue moving per the reversal of a liquidity sweep. So, let's find an order block just to keep things level headed. Down, up, we have a low here. Boom. Yay. We have a sweep. The leg up was the cause of it. This right here is our order block. Boom. We would need to encompass, or the GAN box, or not the GAN box, where's the rectangle? This. We would need to encompass this all the way down to this right here, right? Price, let's go ahead and actually expand this to that candle there. Boom. Everything down past this liquidity sweep specifically, because we had down, up, boom, and we had down, up. Actually, we swept way over here. Because price does not have a wick going higher above this, right? That would make this a valid order block. If we had an order block just like this, but we also had price move down and a wick that shot way high up past this, I believe he's explained that that would be an invalid order block. So the candle cannot close, nor can it have a wick above the order block. If either of those are seen above the order block, it automatically becomes invalidated or disrespected. The only exception to a wick or a body closing above an order block is an SMT divergence, and that is when the opposing chart that we're using, the NASDAQ, is conflicting or giving us a different price range per the movement on the liquidity sweep, right? It's starting to set in. It is 10 a.m. and I've had no sleep. But yeah, an SMT divergence is essentially the only exception to that wick shooting way up high over this order block. And at that point, we won't be trading off of the order block or the breaker block he's about to discuss. Instead, we'd be trading off the SMT divergence and building our same confluences on that chart instead, or whichever one's lagging behind, so we have the most optimal trade. I am unmuted, so you should be able to hear me. I have found 5 examples of word blocks. We're getting there. Hold on, I'm going to pause you. We're getting there, chat. Look at that. That's almost completely enveloped this entire imbalance, this entire fair value gap right here. Y'all see that? I think I'm right. I think what's going to happen is price is going to shoot down into this. It's going to sweep this liquidity right here, right? The candle's going to close roughly in this. It'll consolidate for a second, and then what it'll do is it'll rip. It'll rip really high up. It'll create a new high right there. I think that's what it's going to do. Because we have cleared this fair value gap almost. We're just waiting for it to come down even further. And it's getting there. Before today's done, it'll have cleared that. Breaker blocks. Move up or down prior to the break of structure to the up/downside in trend shift. I'm going to do this my way because the way he annotates it is very confusing to me. This. So he does this. Boom, 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 boom. So the way he annotates it, from this move right here, this leg going up, right? This is the order block that causes this liquidity sweep, right? What we're looking for is the breaker block, which is this move right here, this leg down. It'll come down, and that's what causes the order block, right? It's the move prior to the order block. And essentially, the way he describes it is this is the failed retrace that allowed market makers to manipulate and fill their in the uptrend, right? Their sell orders with the resting liquidity above these buy orders here. Because everyone at this point in time right here is thinking price is going to continue going up, press buy here. But in actuality, market makers are wanting to press sell. They're wanting that change in market. And so what they're doing is they're manipulating it. And per this failed retrace, they're going to fill as many sell orders as they can from the liquidity here, sweep the liquidity from the order block, and then push price lower. And he's going to have a more in-depth explanation. I'm going to listen to him right quick to see how accurate I am with that, with saying that. Just so we're on the same page, and I'm pretty sure I've said it again, like this will be the second time I say it. Liquidity sweeps are orders being filled. Are market makers' orders being filled. So the way he describes it is breaker blocks are the lack of buy orders in an uptrend. I'm going to go ahead and take this, move it up here, boom. Breaker blocks, this move right here, is the lack of buy orders to keep price moving higher. Market makers see this and choose to manipulate the liquidity resting above this high here, creating the order block we see, sweeping liquidity, the order block that causes the sweep in the liquidity to fill all of the sell orders market makers want to fill with the buy orders from this liquidity pushing price down, breaking structure, forcing it lower. Pardon for my Picasso drawing. I'm sure he calls it that too. Let's go and do that. Let's go and do that. Boom. Not that. Yeet. This. Yay. This just became an inverse fair value gap. This whole move just became an inverse fair value gap, and we swept this liquidity. Did y'all see this right here? Y'all see that mess? I think price is about to rip. We just swept that like really, really well. Created 1-2 imbalances. We have an inverse fair value gap, which is a sign of continuation. Price is going to continue moving higher, if I'm not mistaken. We actually closed way lower than I anticipated. That's actually wild. I think this would be an optimal time to press buy, because price, I think, is going to rip way high too. It's going to create a whole new high. All right, let's continue watching for breaker blocks. So breaker blocks he's also describing as similar to that of fair value gaps in the sense of they are imbalances. Fair value gaps are the lack of orders being filled. Breaker blocks are the lack of buy orders within the market, right? In an uptrend, or the lack of sell orders in a downtrend, allowing the market makers to manipulate the previous high or low, depending on the trend, to fill their buy or sell orders in order to change the motion of, in order to change the trend of market, in order to break that structure and reverse per the liquidity sweep. And yeah, I'm getting there, chat. I am getting there. I am confident in my ability to learn this. I'm getting there slowly. Because I'm beginning to feel that fatigue, I'm beginning to feel that tiredness in myself. I think it's best if we go ahead and end today's video short. I understand it wasn't to the length I want it to be, and that I could honestly go a little bit longer and actually do this, but I want to retain this information as much as possible. I have liquidity sweeps down packed, I have order blocks down packed. I am now on to breaker blocks and equilibrium, learning how to use breaker blocks, learning how to use equilibrium, and from that, we're putting it together in the third video that is going to be posted Wednesday, the complete video, completely unedited, right? Wednesday, expect a video. Today, expect 2 videos. We're actually going to take video 1 and video 2, shorten them down a lot so it's a quick, cut dry. You get consistent information throughout it with maybe a little funny bits here and there, maybe some nephew saying hi. Meh. If you enjoy this kind of content, I understand this is more educational kind of content. It's not really gaming, comedy, entertainment. This is primarily my way of learning a skill and applying it to real life application. I honestly think this price right here, I know y'all can see this. I think this right here is going to rip because we have created 2 imbalances. Yes, that is an imbalance. That is a small fair value gap right there now. I think we are going to have price rip way above this, and I am kind of excited to see what's going to happen tomorrow morning when we wake up and we are on the chart looking at this. But yeah, if you like this kind of content, drop a like, subscribe to Orb Plus if you're into this content and want to see more of me learning this and actually taking trades and doing stuff. I won't be live streaming anything. I will be primarily recording this. So stay tuned for that. Turn on your notification bell to know when I upload. I will be literally, this is my way of journaling as well. It's notes for learning and journaling for when it actually is a thing. Subscribe, like if you enjoyed it. Comment down below if I got any of the examples that I chose to go over wrong, and I will correct them as time goes on. I will read those comments, I will read everything about everything, and I will have my constructive criticism feed the path to day trading. With that being said, hope you guys enjoy the video. I think I'll see you. Yeah, I think I will know. I know I will see you in the next video. Have a nice day.